In this video, we're going to look at the market. We're going to look at the potential of an avoided US government shutdown, or perhaps not. We're going to look at helping you to understand the structure and price reality that is inside the markets. It's very important to use structural support and resistance levels and have a flexible mind. Let's get into it and let's run the numbers. The major issue impacting markets right now is the potential US government shutdown. It looks increasingly like the US government will not shut down. The House passed a 45-day measure to keep the government open, but the bill is heading to the Senate, and it's being held up in the Senate by Democratic Senator Michael Bennet over a lack of Ukraine funding. The shutdown has not necessarily been averted just of this time. Today is the last day for Congress to fund the government. It looks increasingly like it will actually pass through Congress, but this is not an assurity. It could fail. If it does, the markets will react badly. Therefore, 10-5-10 funds should be prepared. Because of three-dimensional risk management, we're prepared no matter what way the market goes, but we must also be prepared for the stopgap funding measure to fail in Congress. The greatest gainers in the top 100 past 24 hours: XTC, Maker, Solana, GMX, LDO, Ethereum Classic, and Chiliz. The greatest losers top 100 past 24 hours: Compound, Rune, Fracshare, Sui, Mana, Ton, and Gala. Bitcoin as a Tier 1 chart is very important to understand where the structure is. And this is not recent indicative price structure. It's not simply drawing a resistance line or a support line from recent price. It's drawing it all the way from 2009 to create structural support and resistance, which is captured in the monthly indicator. What we can see is currently Bitcoin is flirting with a resistance level at $27,049. There's a structural support level at $26,962 and a stronger one down a little bit further at $26,893. The next smart money resistance level is $27,232, but something very interesting. If we get a positive momentum inside the market because the Senate passes the bill, we could see a very sharp move up to the next structural resistance level at 28,278. It could be a very interesting time for crypto. This is why it's important to embrace price reality. Inside zones 1 and 2, people want certainty, but unfortunately we can only stack probabilities. The world unfortunately is uncertain. If Congress passes the stopgap funding measure, there will be 45 days until the drama begins again. I've been inside financial markets for nearly 40 years, and one thing that the markets do not like is uncertainty. People can get really freaked out. That's why we do the CTKS code, our daily three-dimensional risk management. We're already prepared if the market goes down, goes nowhere, or goes up. Typically what happens with retail traders and investors, they can only hold one position in their mind at a time. The markets must either go down or they must go up, but they cannot move in a wave. Inside Zone 3 and Zone 4, we understand the price is always moving in a wave. It waves up and it waves down. Certainty is just a con. Stacking probabilities is what we need to do. The very unfortunate thing is retail cannot stack probabilities because they only focus on the charts that they put money into, without an understanding that all charts and markets are intercorrelated and interconnected. They just set themselves up for loss after loss after loss. This can be avoided. How do you avoid that? Professionals look at the market's pulse. They look across the Tier 1, Tier 2 and Tier 3 charts. Specifically, they're looking for CTKS structure, which is formed through objective dynamic market structure. They need to know where true support and true resistance levels are inside the market, and there are many. It looks like an EEG. One thing that's good to embrace today, price reality, is what we embrace as professionals. If we thought the market was going down yesterday, but the price action says, no, I'm going up, hey, we're with the price action, not our story. Unfortunately, retail hangs on to story-based analysis. It simply can't drop the story, it can't be flexible. When we're talking about price reality, we're talking about being flexible. How do we be flexible? We do that three-dimensional risk management. We already know that if the markets go down, what we're going to do. We're going to deploy 10-5-10 funds. If the markets go nowhere, we know what we're going to do. Cycle trading and tight trading. If the markets go up, we know what we're going to do. We're going to participate, but do so at a variety of different structural support levels, and possibly a participation level as well. If you were trading, for example, Solana, you would need to look at Bitcoin and you would need to look at total crypto market cap, but especially you need to know what the structural levels are. If we look here on structure, we can see that structural total market cap structure is weakening. Currently, the $1.056 trillion structural level has been broken down through. Now, what is this telling us? This is telling us that there is uncertainty inside the markets. However, we know that price is always moving structural level to structural level, that is Stanfield level to Stanfield level, or SL to SL. We know that there's underpinning structural support at $1.054 trillion. But if structure gets lost, there's a big drop down. And there's a big drop down, literally, to the $1.028 trillion mark. That could be problematic because that could wipe out the gains that have been made just recently. In Zone 1 and Zone 2, people really panic when they hear this news. In Zone 3 and Zone 4, we make sure that we're correctly positioned sizing. If you're getting really concerned about your positions inside the market, they're already too large. From yesterday's comments, Daryl shared something really terrific. Thank you, Daryl. Reprogramming from retail thinking to professional thinking is a process and not a single event. I find myself moving forward and falling back as I work through the process to reset out of retail thinking. Well done, my friend. Something that could help as well. When we think about retail thinking, we're thinking about certainty. If there's certainty addiction inside your decision-making process, that means you're thinking like you go to work and you just get paid. It's certain. Well, hopefully it's certain. That may be not so for 1.45 million employees if the US government shuts down. But the concept is, when we look at work, that's a regular paycheck. The markets are not like that. The markets reward your understanding of risk and return. Before I talked about trading Solana, let's have a look at Litecoin because all the levels coincide with each other's charts. This is the difference between professional thinking and retail thinking. And LGRC1, thank you, my friend, and for your terrific comment and well done. Today I woke up with 3 levels sold in one place, 14%, 8% and 5%. Legendary. You can see here that LGRC1 applied his knowledge of multi onto Cartesi. Just terrific. This is what we're talking about right now. Professionals embrace price reality, but they also embrace the concerns that price could keep coming down, and they account for it with 10-5-10 and buying at structural levels or in between them. One thing that we look at Litecoin at the moment, we just looked at total. What about Litecoin? It's just lost a structural level at 66.19. It's just moving a little bit lower. When we look at the structural support and resistance levels on Litecoin, we can see a structural resistance level above price at 66.84, but the structural support level is all the way down at 64.56. This is why we need to gain an understanding or put our finger on the pulse of price action. To do that, to stack probabilities, you must look at more charts than you're just trading. Just like LGRC1 did. In yesterday's video, Tessa left a very beautiful comment. These daily videos and slow learning on the CTKS method keeps me going at the moment. To my mind, it is absolutely essential to subscribe to the CTKS method. It is invaluable and you'll never look back. Have a good Sunday. Have a great weekend, everybody. And thank you, Tessa, for your very kind comment. The CTKS method is the standards-based process to draw these lines up, which are the structural resistance and structural support lines. And when we look at Ethereum, these lines have been drawn up since 2015 with the highest level of accuracy possible. We can see that the structural once support level at 1676 has turned into a resistance level. If Ethereum can't get above this particular level, it's going back to the next SL, which is at 1652. If it can get above and convert it into support, it's going to 1692. You can see that there's currently a weakening inside the crypto market. That is not by mistake. People have digested the news that the government shutdown has not been averted. At the current time, the markets feel a little bit like this guy just hanging on, and this guy did stunts way back in the early 19th century. What a fantastic skill he had. But literally, the markets are hanging on by a fingernail, and we can see that Ethereum has said, oh, okay, I'm feeling a bit more negative at the moment. But you already know where it's going. If it can't get above, it's going below, and you know exactly where below is, and that's important. Professionals don't suffer fear of missing out. When we look at XRP, we can see that there was a very, very good positive candle put in. Professionals know that those big candles can be traps. How do you know if it's a trap or just legitimate price action? It all comes down to structural levels. Let's pop on the CTKS indicator. We can see that price just burst through structural level after level after level. And when you do that, it's very, very difficult to maintain positive price momentum. A resistance level is literally where sellers are hanging out. They're hanging out here saying, I'm going to push the price down. The shorts got absolutely hammered and liquidated. We can see that XRP just blew through all of these levels. That also indicates that there's a lot of interest inside XRP. We came up to the 54.43 mark and then found structural support down lower here at 52.90. We can see that that structure then did its job, acting as structural resistance. When we started to lose these structural levels, which are very strong levels, especially around the 5200 mark, that didn't bode well for XRP. As professionals, we're more likely to trade and sell these big spikes, and much more likely to get on the right side of the percentage. Structure literally gives you a window into what price could do, and structure plays across every chart. It's got nothing to do with the XRP at all. If this structure was on a different chart, it would behave in a similar manner. These SLs or Stanfield levels are very important to understand. And thank you to Kacharia, who had a fantastic comment in yesterday's video. All buy orders are set, especially for XRP. I'm curious what will happen. I believe some nasty sell-offs later this year will occur, and if they will be followed by a sudden recovery that takes most retailers unprepared. The Tier 1 charts and the SLs are our seatbelt for that roller coaster. What a fantastic analogy, Kacharia. If the general market continues to weaken, we're going to expect the 50-50 level just down here at structural support for XRP, and there's a couple of them, 50-50 and 50-51. The indicators that I use each and every day are inside the CTKS method service, along with a video that helps you to understand how to look at and interpret these SLs. The key is, if you're inside the service, look at as many videos as you possibly can. My recommendation, look at all of them. The reason to look at as many videos as possible when it comes to the interpretation of these SLs, created through objective dynamic market structure and a standards-based process, you'll see things that you just can't unsee, but you need to look at as many charts as you possibly can. Let's look at Solana. We could see Solana was bumping up and down here and then moved abruptly up and now consolidating. What does the structure of Solana tell us? You can see a structural support level at 2009 and a structural resistance level at 2029. You can also see that this structural resistance level was being converted to support. You also see here a fresh air gap up to the next structural resistance level at 2093, because there was so much negativity inside the main markets. With the US government shutdown, the potential for the shorts to get liquidated was definitely on the cards. One thing the traders do, they seek to get ahead of the pack. They frequently are in advance of the news. In this particular case, we saw a blow up in price, a bit of a rejection around this resistance level, and then another further blow up, because the upwards resistance level on Solana is literally at 22.22. That means that price had this fresh air gap and that fresh air gap. Why is the price curling over like this? It's because of this structural resistance level slowing things down, and also the uncertainty if the US government will shut down. The key inside Solana is to keep your eye on this structural support level at 21.14. There's another one below at 21.10 and another one below that at 20.93. Overall, this price structure looks really good for Solana, but if Bitcoin sells off, Solana will come down. Senator Michael Bennet is holding up things in the Senate because he's concerned that there's no funding for Ukraine. He's thinking about the strategic side of US politics. He says that Vladimir Putin is watching alongside all the US allies in Europe and Asia. We need to watch this space. This is not a done deal yet. Inside Zone 1 and Zone 2, people want a simple answer. It's either on or off. The markets are going up or they're going down. In truth, even if the markets are going up, they're going down at some point. Why is that? Because price moves in a wave. It's always going up and down. How you be prepared and not scared, and apply Rule 252. Know the structure. And you can mark up your own charts with the CTKS method by learning it. Or alternately, you can become a member of the service. In this video, we looked at Bitcoin, we looked at total crypto market cap. They're the tier 1s. The tier 2s that we looked at, Ethereum and Litecoin. And we looked at tier 3s, XRP and Solana. Professionals would not stop here. They would and must know how all the tier 1s are moving. Even though the main markets are closed, their direction is utterly important. It's really vital. Professionals always look at the market pulse, that is, the structural levels inside these charts, the tier 1, tier 2 and tier 3 charts. Knowing the structure is absolutely vital. It's essential. We don't have story-based analysis, we have three-dimensional thinking. This allows us to be flexible with what price reality actually throws at us. If price repairs when we're expecting a sell down, we just react to that. If price goes as anticipated, we react to that as well. But we're always looking at structure and interdependencies and intercorrelations between charts. Having a flexible mindset is important, absolutely essential. And to do that, you can't dig in on a position, you must be flexible. Having humility and patience, learning from your experience in the market, and being kind to yourself and to others is very important. A lot of people think that when they make a huge amount of money, they can be very unkind and mean to others. That's not what money is about. The truth is, if we're unkind to others, it's typically because we're unkind to ourselves first and foremost. Being kind to yourself intergenerationally impacts everything and everyone around you. Life is not about what you get, it's about who you become. Money is critically important in this world. Truly, the only way to acquire money is to acquire the skill. Retail skills lose money. Professional skills make money. You'll find that markets reward knowledge and penalize the lack of it. The most important thing anybody can ever do, look at more charts than you trade or invest in. If you're looking at singular charts, you can't stack probabilities. If you cannot stack probabilities, you will lose money, guaranteed. Because it's Sunday, I think it's time to read through the CTKS Creed, which are daily positive affirmations for abundance, financial success, and happiness. It's all about creating better habits because better habits create a better life. With better habits, you have a better mind, and a better mind creates better outcomes. All results come from the mind, so when you master your mind, you master everything around you. An affirmation is simply an I statement that you say with belief, conviction, and enthusiasm. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Buy on red, sell on green. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.